In this video, I want to show you a very simple and reliable 1-minute scalping strategy. I use this strategy every day to find winning trades, and it enables me to have trading days like this one, this or this. And it contains just 3 very simple steps. I will explain all of these steps in detail during the video. And afterwards, we will move on to some real trading examples so you can see how a real trading day can look like using this strategy. And yeah, as I already said, we have just 3 very simple steps for this strategy. And after step 3, you are ready to look for a market entry and to place your entry to stop loss and target. But a bit more on that later. First, I want to show you my trading results from the last 3 months, from the last 90 days. You can see my P&L curve right here. Yeah, it was a very good trading period for me, but I also want to make clear that it took me years of trading, of practicing, trying and error till I came to this stage. So I want to make clear that for you, if you start using this strategy, don't expect this right from the start. Give you some time to practice, maybe with paper money or with little money before you're starting with a real money. So the goal of this video in the end is to give you an easy and repeatable scalping system, a complete system you can use to find winning trades every day. It should take you not more than 90 minutes per day, maybe even less in the end. As I already mentioned, we have 3 simple steps for this strategy. First, the foundation of the strategy. And then we have the setup you have to look for on the charts. If you find this setup, you can look for a confirmation signal to be allowed for the execution of a trade with proper risk management, clear entry, stop loss and targets. The first step, the foundation of the strategy, is about the first hour of the New York session, because this is where the volatility comes into the markets. So we need to mark out this level, the so-called opening range. And after we have this range, we can look where price is heading to. If we get a breakout above the range like here, or a breakout below the range right here, then we know we can look for long trades or for short trades. And in the third step, we need to look for an entry signal like here, and we need to define the rules for the entry, the stop, and also for sure the target. After we went through all the steps, we will have a look at different live trading examples for sure, for you to get an impression of how this looks like. So make sure to stay to the end. But before we dive deeper into the 3 different steps of the strategy, I want to make some things very clear, because many traders start using a strategy the wrong way. They use too many indicators on their chart. They're looking for all of them to rely on to find an entry, but they don't really understand the context behind everything, so it looks like this here. But they don't understand that simplicity is what scales. So you just need a few fixed rules, like in this strategy. You don't need 10 indicators to align, just a few indicators for automation and to save you some brain capacity and for sure also time. And then you need to stick for just one strategy, like this one here in this video. Many traders start with one strategy, then they have some losers, then they switch to the next system, then they have some losers again, they switch to the next system, and over again. They don't have the patience to stick to one system and really try it and to bring it to life. But now let's start with step 1 of this strategy, and this is the so-called opening range. The first hour of the New York session. Yeah, it's very important because this is the time where big players come into the market, and that's why in the first hour we have massive volatility before the market cools down and finally finds its real direction. So this is why we mark out this very important range, and this happens every day at 9:30 EM Central Eastern Time. So that's also why you can use this strategy every day and look for setups again. And then after the first hour, we need to mark out the high of the opening range and the low of the opening range. And we need to do this on the 5-minute time frame. That's very important. Then after we marked out these levels, we go down to the 1-minute time frame, because this is the time frame where we want to find our scalping signals. And from now on, we have a close look at the high of the opening range and the low of the opening range, because what we are looking for next is a breakout. above the range, like here in this case, or below the range, which would be the sign that we are start looking for short trades. And with a breakout above the range, we start to look for long trades, because this impulsive move above the opening range high shows us buying pressure is increasing and that we can start to look for long signals. And the same on the other side, if we get a break down below the range low, then we know we have bearish momentum, selling pressure increases, and we'll start looking for short entries. Let's say we get a breakout above the opening range, like here in this image. Then we first need to check if it's a confirmed breakout. And it's only a confirmed breakout if we get a clean close above the opening range, like with this candle right here. And then afterwards, we need price to push higher to print a clean new high, this one right here, because what we need in the next step is a pullback to the opening range. And therefore, we first need a clean impulsive move upwards to print a high. Then we have the space that price can move down again and retest the range. Then we have the pullback to the opening range high, like here in this case. And the important thing is that on the pullback, we don't close below the opening range high. It's okay if we don't pull back completely to the opening range high and have some space left, like here in this case. Yeah, there's some space left. That's completely fine. But it's important that we stay above the opening range, because this allows us to look for a long entry signal in the next step, because we expect markets to turn bullish again after this pullback, and if we stay above the opening range high. After we had the pullback, we need bullish momentum afterwards, and to see if it's a real bounce from the opening range high, we are start looking for a candlestick pattern, a bullish candlestick pattern for confirmation. This can be just an engulfing pattern, for example, or a morning or evening star, or like here in this case, just a close above the previous two candle highs, which we did with this little green candle. Then we have a confirmed setup and we can expect market to recover and start its uptrend. After we found an entry, we need to place our stop loss, in this case below the opening range high. That's very important. Always place it below the opening range high. And then we need to define a target, and this can be a previous resistance level, like here in this case. Or if you use previous resistance level, then we just use a 2 risk to reward ratio. Then after we had one winning trade, and we started into a nice uptrend, like here in this case, we can look for another trend following signal, and therefore we just need to pull back to a previous high we formed previously in the uptrend, like here, this high. If we get the pullback and also manage to stay above the previous high, then we can again look for a candlestick pattern, like a morning star, engulfing pattern, 3-line strike pattern, anything that's possible to find a long entry signal. And here in this case, we have something like a morning star pattern with a large down bar, a doji or pin bar in between. And then with this green candle that closed above the doji or pin bar, this is a confirmed morning star pattern right here, and it's another long signal. And again, we use a risk reward ratio of at least 2R and replace our stop loss in this case below the pullback. And if the trend continues higher afterwards, you can again look for a pullback to your previous high, like this one, and look for another up signal and then follow the trend and continue like this. And that's also why you will find a lot of long entry signals once an uptrend is established. So now let's continue with the first trading example. And in this example, we are on the ES 5-minute time frame right now. And we already have the opening range right here. The first hour of the New York session is just over. So we marked out the opening range high and also the opening range low. And now what we do next for sure is we go down to the 1-minute chart. So here you can see the opening range. And now we want to see what happens next, because we need a breakout or breakdown. Okay, here we took out the opening range low, this one right here. But as you can see, we pumped back above and closed inside the opening range. So this is not a confirmed breakdown and we need to continue. Let's see what happens next. Okay, this is the breakout right here. As you can see, we closed above the opening range right here. And then afterwards, we had a little breakout. and then a pullback to the opening range high, but we managed to close above the opening range again. So this is a confirmed pullback. And as you already know, step 3 is now we're looking for an entry signal, a candlestick pattern, and therefore I used a very helpful indicator, the Trend Bars Pro indicator by TRN Trading. It's based on an algorithm that computes the trend based on candlestick patterns, and it also prints signals based on different candlestick patterns, and it makes it easy for me to spot signals because I'm just waiting for another signal from this indicator as entry. Here we are. This is the signal we need. It's a so-called breakout bar, and we can use this as an entry signal. So in this case, we'll place a long entry right at the candle close, place the stop loss below this pullback right here, and then just use a risk reward ratio of 2 in this case. And yeah, very nice. The setup played out as planned. And here comes the next example, this time on the Bitcoin 5-minute time frame. The opening range is over, the first hour of the New York session again. We marked out the opening range high and the opening range low. So this is fine. And now we go down to the 1-minute chart. Let's see if we get a breakout below or above the opening range next. Okay, this is a confirmed breakdown below the opening range as we closed below the opening range right here, and it's also a nice breakout with a new low that we printed right here. So what we need next is a pullback and then a bounce off if we want to find a signal. So let's see what happens next. Okay, it takes it a while right now. Let's see. Here we're getting close to the opening range low again, but no candlestick pattern in this case, so no entry for us. No entry. Here we get another test of the opening range low right here. Let's see if we can get a signal this time. Yeah, here it is. The Trend Bars Pro indicator printed an evening star pattern, as you can see right here. And this will be our short entry signal in this case. So let's place a short order right at candle close. And for the stop loss, we place it above a previous high in this case. Yeah, this high. And I'm using another helpful indicator, the swing suit indicator, which displays resistance and support lines on the chart. I can really easy use to place stops and also use this as a target. So we place the stop above this previous high and we target a support level, this previous low, also displayed by the indicator. We have the risk reward ratio of 2, so this is completely fine. And here we go. This is another winning trade for us. Here comes the last example. This time we're on the Bitcoin 5-minute chart. We're at the end of the opening range. We mark out the high of the opening range and the low of the opening range again. And now we go down to the 1-minute chart. And let's see how this plays out this time. If we get a breakout or breakdown. Okay, this is a confirmed breakout. First we had the close above the opening range. This is very important. And then an impulsive move upwards. We printed a new high right here, a higher high. And the next thing we need, a pullback to the opening range and then a bounce off a candlestick pattern at this point. And then we are ready to enter a long trade. So let's see. Okay, this is the pullback we need. And now just a candlestick pattern, and here it is. This is our candlestick pattern. In this case, it's a bullish reversal bar, also from the Trend Bars Pro, a candlestick pattern. And then we can place our long entry right at candle close, place below the opening range high. This is very important in this case, where we have the pullback to the opening range high, that they place the stop loss below the opening range high. And then we can target a previous resistance level like this one right here. And this time we even get a better risk reward ratio of 2.1. That's very nice. And here we go. We're not stopped out. This time it takes a bit longer, but here we hit our target right here, you can see it, another winning trade. And you can also see that our stop loss was not hit. And it was placed very well, right below the opening range. It worked perfectly in this case. So now, as we are in uptrend, we need another pullback to a previous high, like this one here, for example, and then bounce off. And then we can see if we maybe get another entry through another candlestick pattern. By the way, if you struggle to spot these trends and you know if you're on an uptrend or downtrend, you can use a powerful feature of the swing speed indicator, the swing trend. If you turn this on the settings, then you will see if we are on uptrend and downtrend. As long as we print green dots right above here, then we remain in uptrend. And you can look for entries after pullbacks. So let's see how this plays out this time. Okay, nice. We have the little pullback to this previous high. And then we're coming up with another reversal bar from the Trend Bars Pro. So let's place another long entry right here at candle close, a bit closer. So like this. And then again, we can target a previous high displayed, this higher high right here. We have a risk reward ratio of 2.2 in this case, better than 2. So this is a valid trade. And let's see if we can make it. Yeah, this is another winning trade. And with this said, I hope you liked the video and I hope you want to try out the strategy. If you have questions, just leave them in the comments. And as I said, if you liked the content, then please leave a like and a subscription. See you in the next one, guys.